Hello, everyone. Welcome to another episode of the Eitel Insights podcast. This is your podcast host, Andy Park. We've got a quick turnaround for you today. We took a look at the detached market for Greater Vancouver for the data that came out in October, and now we're going to take a look at the condo market, which obviously gets a lot of buzz every time we put one out. There's a lot of condo owners and prospective condo buyers, so we'll be tackling that issue today. So, Dane, how did your week go?
It's been fantastic so far. It was a pretty quick turnaround from our detached podcast, and we got quite a bit of requests for the condo market right away. So, we like to keep everybody happy, so here we are.
Yeah, for sure. We are completely beholden to our listeners.
That's right.
And that's why we do this. So let's dive right into it. So typically the condo market lags a little bit behind the detached market, but October had some interesting wrinkles in it, and there's some interesting implications for what the condo market's going to do moving forward. So, Dane, can you give us a quick kind of overview of what happened with the average sale prices for condos in Greater Vancouver?
Sure. So the actual sale price came in at $661,204. So that's very interesting, right? I mean, as our followers know, we technically analyze the market and we show, price indicators where it's, going to show up in a feature. Well, as we kind of said before, was trying to hold ground right around that 650 mark, that yellow line, right? And subsequently it troughed its way back up to the other yellow line, which had held as a temporary bottom, as we prescribed it would definitely break. And that's right around 675. So that's the higher of the two yellows. And so subsequently it went back up there, tested it, and said, no, it doesn't seem like we can go higher. So the market's kind of backtracked here, just a little over 1%, over $13,000 back to $661,000 for the month of October. Kind of what this indicates to us long term, there was a little bit of a buying frenzy that seemed to have happened roughly around June, when prices were down 15%, right around that 650,000 threshold, 646 if I'm not mistaken. So that was kind of an impetus to start buying, right? And since then, that thought has continued. They're buying properties that are down in value, that are within their price range. But we definitely see a market going lower longer in the condo market, as you alluded to. I mean, it's no secret that condo markets lag detached markets. They are kind of that little brother that wants to go everywhere the big brother goes, right? So the detached market is a market created of the land, right? The condo market, you can take away 5 detached properties and build up a pretty big development, right? So, and that's what we're actually going to kind of face here over the next few years, is an artificial increase to the inventory, to the available options, and none of that's really going to help this market. So while it's seemingly trying to base out here again after it couldn't find a base at 675, this won't be the base either. Eventually we're back into the 10-year uptrend, which is basically prescribed here in the chart, diagnosed by the black lines. And that's fairly conservative. So we will establish our way back down to that, but this market really won't bottom for quite some time. We think 2022 is your actual technical bottom. 2021 is when we're going to be down near the doldrums, right? And why that's significant, that brings us down to the 525,000 pricing threshold. And that brings you back basically down to the 2015, 2016 prices. So again, you're into that need-based selling. The detached market will experience that in 2020. We're thinking 2021 for the condo market, for that affliction to kind of rear its ugly head for the condo market. So, there's no rush to buy other than need-based buying. If you're really sick of paying the mortgage of somebody else's and you're paying rent, that's a total sound theory, and that's worked, throughout the grandiose of time. However, in particular situation, the market's already down roughly $90,000 from the peak, and we still got $130,000 to go, right? Or it's down 12% and another 18% to go. So in that instance, there's almost no way you can pay enough rent that would mitigate waiting to purchase, right? So, even, to pay off your own mortgage, it's a great thing. However, it's also a nice thing to purchase an asset class that's actually appreciating in value. So if you purchase today, chances are, on average, the prices will be down $130,000 before we base out. we like to say you should be buying in that lower third. We're literally kind of smack dab in the middle. So we're not near the lower third yet for a green light to buy. You don't have to wait for the absolute bottom, but closer to the bottom is ideal. And that way you can see your accruement of equity with time rather than you see the decrease in your equity loss, which is what we believe will be happening here over the next couple of years.
Right. So that's really interesting. I mean, this is kind of counterfactual to what you typically hear, right? You should say, people always say there's never a bad time to buy because you don't want to be paying someone else's mortgage if you're renting. But in this case, the idiosyncrasies of the market sort of dictate something different. So if I just run some quick back of the envelope calculations here, if the condo prices on average are going to drop 135K in relatively short order, and let's say, even on the high end, I'm paying, $3,000 a month in rent. That's, something like $36,000 a year. I need to be able to do that for 4 more years.
Right.
At a minimum, before I ever make back the money that I'll lose by buying too early. Is
that's a basic calculation, absolutely, and a $3,000 rent. We're talking downtown prices for sure. Right. So, and here's the other oddity, right? I mean, the market truly peaked in January of 2018, right? So we're kind of 2 years off, and we're down 90,000. So, and again, it lags the detached market. The detached market, at its worst, has been off $360,000, right? Mm-hmm. So, money saved is money earned, as we've said before. So it's there's still an opportunity to save money and thus earn money when you actually do enter into this market. We will give a green light eventually. It's just that the market's not there yet. As with other analytical indicator or analysts and market prognosticators, they've been saying for the last couple of years, don't worry about it, buy with a 20-year outlook. Okay, but we could have a similar outlook with an 18-year return on our investment and have a better, return.
Why throw money away?
So exactly, right? So that's the easy answer, to buy and not pay somebody else's rent. However, that's the kind of actionable intelligence Eitel Insight offers, through our reports, through our client base, and a variety of different, levels of offerings that we have for the different clients, right? Mm-hmm. So at the bare minimum, we're going to tell you what the prescribed loss of value in for, let's say, if it's Coquitlam or New West or even a sub area, right, of central Coquitlam. We can actually diagnose those as well for the condo market and give you the average losses of what those are going to realize. Now, in the condo market, there really isn't any market that's close to its bottom. So we can almost generalize on Greater Vancouver. They still all have further room to go lower. The detached market, by and large, same story goes. By and large, they still have much more room to go. There's a few markets that are entering into their technical bottoms, and we believe they're just going to kind of flatline and baseline right around there. So again, condo market lags. There's no real safe asset or market class that could, we could say, hey, yeah, sure, you can go ahead and purchase. Yes, you can, of course, but you will realize a loss over the next 2 years. And if that's, within your frame of mind for an investment or for personal ownership, fair enough. If you just got to get out of the house and you got to start living, prices are down 12%. That's better than peak. We just believe there's an additional 18% to go.
Okay, that's a good insight there, as always. So let's move a little bit into the sales numbers here. So just like in the stock market, just like any time you're trading an asset, the average sales prices tell one side of the story, and then the volume is tightly coupled to that. So you need to keep that in mind too. So what actually happened with the sales numbers for condos in October? Right.
So condos numbers have been increasing basically over the past since it seemed to bottom in December of 2018 there. So what we're seeing is, again, that erosion of prices cause some people to purchase because they have need base. I got to get into the condo for whatever reasons. We're going to see eventually that find its own range. And especially as the inventory continues to grow, right? And that's kind of the misnomer that people think that sales need to be completely off the map like they were for prices to keep going lower. Well, that's true if the inventory never changes or if that, dwindles the inventory. However, we're going to see a number of inventory properties come on the market. And by that, we mean the pre-sales. Pre-sales sell a year or 2 or 3 out before the completion. That realization happens in 2020 and 2021. So there's going to be that not only a normal market factor that's lowering, you're going to introduce artificial supply, right? And that's why that demand can actually be at normalized levels, but it's not enough to keep up with that oncoming inventory. So yeah, the inventory numbers, we're roughly close to the 1,500. Kind of the oddity of that, we can still see around a 1,600 sales and still be within the conservative downtrend. Here, we'll put the chart up on your screen so that we can actually know exactly what we're talking about with the sales. And that's where we are. So it's very middle of the snack bracket in the downtrend, if you will. Again, we've fallen out of that downtrend, that falling knife. And that's resulted in basically a dead cat bounce, right? And that's a normal reaction in any market. When something falls too far, basically below what it should have, you see a snapback reaction. And that's what we're going to see here until it probably settles out, like we say, and we see more of a selling range where the sales kind of live within that range for about a year or two, and then we see as we go further. But yeah, the sales were more positive, and that's why we can say, or we can understand how people that quote the numbers say this is a positive. Absolutely, it's a positive. But that's based on a horrible precondition, right? So, where do we go forward? It's still nothing glorious in any way, shape, or form. And that really covers right across the board, the detached market, the condo market, right across Greater Vancouver.
For sure. And I think there was some terminology that was introduced in the last podcast that I found particularly helpful to describe this market. But for people who actually missed the last podcast, could you explain again what need-based buying and what need-based selling is?
Sure. So need-based buying basically exists all the time in Greater Vancouver, right? We have people across Canada looking to retire in Canada. There's international demand. Always, right? Sometimes it's at peak level, sometimes it's at doldrums, but there's still demand. So Vancouver is an area that people want to move into, and so you're always going to have between 30 and 40% of the market that needs to move. And now that's people that, moved up in their jobs, got a new title, got some more money, got some savings. They want to purchase. They want to eventually get on with their life, and they don't necessarily care about technicals. They just want to own with that old mentality. It's okay, I got a 10 or a 20-year outlook. Fine, fair enough. We think there's a better way to take care of that. But again, fine, fair enough. So that's that need-based buying that's going on. They weren't even allowed almost to buy over the last year or two, really, because of the stress test. Market knocked you down 20%. Market actually realized a 15% loss. Well, those guys that saved every nickel and dime or got some additional help from the bank of mom and dad or however the case may be, they're in on that market because they're just sick of waiting, right? We think those that have a little bit more patience will realize a greater return. As they say, patience is a virtue, and that's going to be the case in this way. Now, patience is definitely not a virtue for the sellers, right? As we see here, this is that dead cat bounce. You want to be taking advantage of this. You really, really do not want to be entering into a year of 2020 and 2021 with brand new inventory on the market with warranties, owners, or there was complaints about people that were buying multiple units. Well, those multiple units aren't all going to be able to be rented out that first month, so they're going to toss a couple online and they're going to try and rent out a couple. Like, there's going to be a lot of inventory, a lot of chaotic factors. We would advise you to get ahead of that. Go on the market now, get a nice little Christmas gift for yourself, sell your investment condo. In the detached market, whereas sometimes we're actually at the case where you might want to hold because you've already realized so many losses, we're not at that case in the condo market. If it's an investment vehicle, and even if you bought it in 2016, you're going to realize some losses, it might be better to go ahead and get rid of it now because you're still at a possible gain rather than when you're going to be in 2021 at a real negative position. And that's where we enter into that need-based selling that the detached market is going to be entering here into the coming year. The condo market's still got a couple years from that, but rest assuredly, it's coming, right?
And another point of clarification that I wanted to bring up, when you were speaking about inventory levels, you mentioned that the pre-sold condos are going to come to completion and the inventory is going to skyrocket. Now, is that because so many people are going to default on those pre-sales, or they're going to go and they'll pay for it, but like you said, if they can't rent them all out, they might just throw them back on the market and realize the loss?
Both ways. Okay. There's going to be some people that are just going to walk away from it. It's too much down, and I foresee the future value. You know what? Keep my down payment. I don't want the 10 properties, right? There's going to be some of that.
Right.
There's going to be a lot of it that I'll complete on it. I'm a local. I got to complete on it, and they're going to have to either bite the bullet one way or the other. Rents. There was just an email that got sent around to most realtors. I believe it was today or yesterday. that said, rental values are on the increase. Well, the oddity of that is the higher value ones are actually renting at lower values, but they're actually renting for the first time in a couple of years, right? So that's kind of that oddity where it's maybe a little bit misread and really going to be short-lived of a feature, as you just see tons and tons of rental opportunities come in. I mean, in the downtown core in Coquitlam, in North Burnaby, in North Vancouver, in New Westminster. I mean, there's been building going on so much here over the last few years. It has no choice but to inundate the market with inventory of, yes, resales and of rental properties, right? Both by A, the developer, by B, the guy that bought it as a pre-sale, or properties that were kind of Johnny come lately. They're only at 30 or 40% sold, but they got enough income to actually complete on the build. Those ones will still be available, right? And then that developer has a decision to make. Do I rent it out and try and make some short-term income, or do I sell it and maybe not make as much as I had thought I was going to? Or it's really going to be a lot of almost chaotic features if you don't get a sense of what's coming. And that's what we always like to kind of say, like, hey, I mean, we've been saying this feature would come. Well, here it is, right? And we've been prescribing that over the past couple of years in the written form, and definitely over this past year on the podcast, right? I mean, the analytics, I know that we're going to get into our kind of national stuff here probably early of 2020, and we'll give an update on it. But, I mean, all the markets that we prescribed, they're going our way, right? So that's the kind of indicator that technical analysis, the way that we forecast, is a real way to interpret market. We don't need to get a GDP factor to come out. First of all, it's a year late. What's the good of it? And even the real estate board kind of came out and said, maybe it's not the best way, and they're trying to mimic a way to make it a monthly GDP. That's cool. Well, we just say that's a non-factor anyways, right? So, the proof's in the pudding. We could be wrong eventually one day, but it hasn't happened yet. And, knock on wood that we keep analyzing the markets correctly.
For sure. And on that, I'd just like to point out that there are nuances to individual markets as well. So naturally, to engender interest, we talk a lot about the Greater Vancouver real estate market in aggregate, but each individual, even down to each individual region or even neighborhood, operates independently of each other, right?
I mean, there's three factors of Burnaby: a South Burnaby, a Central Burnaby, and a North Burnaby. Yeah. They act independently, and then you can analyze Burnaby overall, and it still makes sense. But they are at varying different price points.
For sure.
The detached market between Central Burnaby and North Burnaby is different. The condo market between Central Burnaby and South Burnaby is different. So, and we can break it down in that way, and even down into the sub areas. And that's how you get the greatest value out of us, is by really knowing how the market's going to produce. And then how do you individually take advantage of it? As you say, these are Greater Vancouver numbers, and there's still actionable intelligence that has been perceived for sure. Once you get us as your, analytical company, you really realize how much juice that we can kind of boost your engines with. It's an interesting factor.
Yeah, for sure. And we got an interesting comment on our last podcast, and we really appreciate all of them, and we appreciate the interest. We love how we're getting new fans kind of enjoying the analysis that we impart as we go. But if we get too granular and the resolution's too high, then naturally it's not going to appeal to as many people. But kind of last topic I wanted to touch on is these inventory levels. So
for sure,
what happened in October with condo?
What happened in October was interesting. It actually broke out of the growth trend, or the uptrend that the inventory had been in. And we'll just toss that chart up there. So that's an interesting factor, right? That uptrend was fairly aggressive, really not sustainable. Similarly to the downtrend in the sales numbers. I mean, aggressive, not really sustainable. It assuredly, again, we're going to find a level. It's the fall market. We'll find its low. Each fall season does find a new level of low. Probably we'll find ourselves into a conservative growth trend, likely with that, end of 2018 number instigating this, leading forward to 2019, leading forward to the 2020 and 2021 as we go on. Again, natural factors of this market would see inventory increase from its current levels in spring and summer, and just throughout the market as it continues to fall, as we get closer to the need-based selling in the condo market. And then you throw on that factor of the pre-sales coming to completion, properties coming to the market, and I mean by the hundreds, by the thousands, right? So it's gonna be an interesting time. So again, the The sellers that really don't have the stomach for this. I mean, I know a lot of people were in the detached market and just saw this runaway train of a real estate investment, right? And it was just guaranteed money, and the media was talking about guaranteed money, so they hitched their wagon and bought a couple of pre-sales. If you're churning your stomach at 12% down, maybe it's not the time, or you just invested at the wrong time, right? And it's not easy to invest at the right time until we like to think that we came along to show you tops and bottoms of a market cycle, which is exactly what we do. Those folks really bought at the top of the cycle. If you bought 2017, 18, I mean, you're right up there. So maybe you want to take your first loss as your best loss in the condo market, rather than seeing it all go all the way down. If you sell out now, theoretically, you could buy back at the lower levels and at least save a down payment. We're going to save over $130,000 by selling out today rather than in 2 years from now. So, there is still time to take advantage of it in the condo market. In the detached market, you almost got to be a little bit leery, right? Some of those properties, they're at such low levels that you just want to hold until property values start coming up. The condo market, we still see very much going lower longer, and a whole new introduction of a kind of new entity of a market that we haven't really seen since the 90s. And that was in the detached market when we really started building up Coquitlam and Port Coquitlam. This is our first kind of major onslaught of brand new condos coming by the thousands, like I said.
Mm-hmm. Yeah, and that's kind of one point that we continue to bring up, right? And we understand it hurts, and you might wallow in a pit of depression for a short period of time if you sell now, but you can also think of it as a great opportunity, right? If you sell now and buy back in when the market goes down even further, then you've kind of recovered your losses there, haven't you?
Yeah, absolutely. Yeah. I mean, like we say, and we won't disagree, let's say, with the other analysts that say a 20-year outlook. Absolutely. I mean, buying land, buying a real estate asset class in Greater Vancouver is a great thing 20 years out. We just say that there's to kind of mitigate yourself from going into the circumstance when you bought at the peak and maybe you have to sell at the bottom. We analyze those markets, right? We say, well, you know what? We're actually entering into a growth phase. You're fairly safe. This market will enter into the next market cycle at a higher value than where you're buying today. That's not the case we're at in this market in particular, right? We're basically smack dab in the middle, going lower, right? So, money saved is money earned. Maybe don't purchase, and maybe sell. And you know what? If you don't have to enter in at the bottom, right? Since you're kind of scared about picking markets, we can show you when the market starts to recover and you're fairly safe in your investment, right? Just kind of on that, just strictly investment speaking, condo markets get a lot of love, right? And rightfully so. They're a lower entry level asset class and a high demand for rentals. The one kind of factor that not too many people actually talk about or acknowledge is that you can artificially increase the supply, right? And that's why we like to steer you towards detached market, especially in Greater Vancouver. They are building no more land. We've built up Burke Mountain in Coquitlam. Like, we've literally built up a mountain. Right, yeah. So where else are we going to find the land, right? So exactly what you're seeing right now in the detached market has kind of hit its peak, and it's an ever shrinking asset class, right? They're knocking down detached properties to build up condos. The condo market is an ever increasing asset class. Right. So if we just talk strictly markets, the detached market is your truest form of a market. If the market's going lower, true enough, the detached market's going lower. Yeah. If it's going higher, of course it's going higher, and it's going to be a leading indicator. The condo market will continue to see this affliction of brand new inventory as we go further in time. So not only does the condo market be afflicted by the market, but now it's, if you're in an area that has new development, you really don't stand a chance of too much market appreciation, even if the overall market's going up, because you have new inventory, right? So that's why we say, just straight bare bones safe asset. It's the detached. Yes, it's a more expensive asset class, but it's also more expensive for a reason. It's more desirable, it's more valuable, and long-term will be worth more. Even on a comparative basis, basically buying that same condo and the detached, you might be at a similar percentage point, but the dollar value is very, very different.
Awesome analysis, as always. There you have it, your real estate oracle, Dane Eitel, founder and lead analyst of Eitel Insights. We'll see you on the next one. We got a lot more interesting content coming your way, and we'll do our best to keep these coming regularly and not take so much time off. Thanks everyone for listening, and we'll see you on the next one.